Good day, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday. And we're now at the 4th of January, 2022, just getting on after 5:30 p.m. Central Time. Now, before I go anywhere, on Thursday at 12:30 p.m. Central Time, I am holding my live webinar. It's a 20-minute event where you get to come in and ask all the questions you may want. I go through charts of futures, stocks, spiders, and ETFs. I'll answer as best as I can any chart question on that arena. To get into it, if you didn't get the invite already, and they were sent out a few hours ago, just take your cursor, slide it up, get up to the top here, and all of a sudden an icon's going to appear. Click on that icon. What happens? You're going to see the form, fill it out. You'll be sent your user ID and your password, and we do change those each and every week, by the way, that I hold one of these. And there'll be in there an area with my email address and all. Click on it. You can write me your questions ahead of time. Gives me a chance to prepare the charts so I can run through them. It's a 20-minute session that I do not record to post on the website. Not going to be there. You either attend or you miss it. I get people always saying, Ira, can I get a copy of it? No. You either attend or you miss it. That's the policy I want to run with it. You know why? You attend. And when you attend, I'm not talking to myself. The other parts of it, everything I teach in it, you can get a lot of it in my paid subscriber area. So this is how I want to do it. So what we have now is more and more countries, today Boris Johnson even coming out and saying Omicron is not the terrible event the Delta was in terms of the depth of killing people, period. Yes, it gets you sick. If you don't have a vaccination, you get sicker than those that, when they get it, have been vaccinated. It's that simple. There is nothing to stop you from getting COVID other than wearing a mask, staying home, things of that nature. If you're going to get it, you're going to get it. But if you're vaccinated, you're way better off in terms of how sick you might get. You can't say anything beyond that. I know now Macy's, they have just announced it's going to start closing stores in Chicago. They can't get the staffing. Chicago schools are voting tonight. Teachers union, they don't care what the city says. If they vote to teach remote, that's what they're going to do, and they'll get into a huge fight with the city over it. But the cities can't then open the schools. They don't have the staffing there to take care of kids that show up without teachers. I mean, this thing just shows you how serious it is and what you have to do to pay attention. In the financial world, did Santa leave the building? You got it. The two-day rally in January may have come to an end now. We had a beautiful Christmas run. The indexes that were the weakest, which were the NASDAQ and the Russell, they continue that way. Even the Dow's giving something up with the strength of the S&P. Those had been the strongest. The gold market started coming alive today, even in the face of a stronger dollar and with rising interest rates. There's a huge battle on television if you watch every morning. How many rate hikes are we going to get? When's it coming? You know, March is a live meeting. Maybe that'll be the first one. I was on today on BNN TV talking and saying, stop it. The Fed's data-based. They're going to wait as they get into March. They'll make some decisions. They're rolling off the sheets right now. The QE's ending for all purposes each month. They'll want to see the impact. They'll want to see what inflation does. Was inflation, believe it or not, they won't use this word, were large parts of it transitory or not? We are seeing in different parts of the world that you're already hearing it was transitory in certain parts. Pay attention to all that. Parts of it aren't. You don't give people raises and take them away. If you look at the JOLTS number that came out today, you got to also pay attention to that. The amount of job openings went down from 11 million to 10 million, 550,000. It's still a drop. Why? Did the employers just stop hiring? I don't think so. It's people taking the jobs. That's what I think's going on. In the S&P, you're up and away. You're up a 0.5 percentage point for the week so far at a new all-time high. I told you I think we're in a distribution area this week. I've said it to you now the past few days. I'm still in that camp. Haven't changed my opinion. I said it in part because I'm not seeing a trend here. I know you went up and made an all-time high. I know the market has come up. But the market stepped out of that just recently on the break back here when you broke the pattern of higher lows and higher highs. And now you're in distribution of prices. That distribution is taking place over the 18-day moving average. All the key averages are below the market. But where is the resistance? Why is it suddenly stopping? Well, it's not the Bollinger Band. It's window envelopes, and I don't show you window envelopes here. They are on my morning subscriber videos. That's where I plot them out, and my subscribers get the values for them, and you put them. I think it's the combination of them and the upper Bollinger Band, but you hit the band here, and that was like, how do I say this? You're at a party, prices are running away, and I walk in as the evil villain, ha, 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 and I got my pin, and I hit the balloon. Well, that lets the air out of the balloon, and it starts setting back. Is this a major top? That's not what I said. I think this leg of the market, that big, neat leg going into the Christmas at the beginning of January, might be ending. That's what I'm saying. Why? Because you get embedded. When these breaks come in, until that red line closes under 80, what do you think I think I'm going to be telling my clients and other pros are doing? I think they'll buy this market until that red line closes under 79, looking for another test to the upside. In the NASDAQ, you don't have that. You never did embed. You're overbought in a correction phase, headed back to the 18-day average of closes to regroup. In the Dow, embedded. So the two that are strong went up, and this market's much stronger than the S&P. It went up today and again hit the upper Bollinger Band, but I'm going to repeat myself. On breaks in this market, I think the pros will buy. These are the two indices, the Dow and the S&P, that are being bought, not the Russell, unless it embeds. And lo and behold, the lonely Russell, well, let's not count today, which is Wednesday's trade. Let's keep Tuesday. Both numbers were over 80. Both numbers were over 80 on Monday. That means coming in, they weren't that way on Friday. If today were to finish like this, I'd have an embedded reading. It would tell me that the pros would be buying into these breaks, which I think they're doing anyways right now, but it is overbought. I need to leave the overbought status before I would tell my clientele to buy there. This is still an area where you take money off the table if you're long. What had been resistance is now acting temporarily as support, but you are overbought. Any move back under the low right here, this number, 2231.40, probably does this market in, and it has to fall back to the 2213 zone and rebuild. That would be the way I look at it. I'll give you the thing that's been acting good. The fact that the VIX isn't rallying as you broke down 200 points in the NASDAQ today, as you broke down in the S&P, just a few, but the Russell also stalling, that's pretty good. What did I tell you the other day? You're embedded. So I think the pros are selling into those rallies right there, looking to take profit. They won't wait for the Bollinger Band. You're going to say, why? Because you rarely hit it. What they'll go with is the window envelope. If they hit the lower Bollinger Band, they'll use that to write. I know you're going to think I'm wrong here. I think they'll write puts to get back up into these averages. In the 30-year bond, you're 2 days in a row under the lower Bollinger Band. Are you embedding? Both numbers you can't count today. You got to go to Tuesday. Both were under 20, both under 20 there. Day before, not the day before. So Wednesday's the key day. Is the market going to embed? Markets, especially in bonds, don't like to embed. That doesn't mean it won't happen. So I think as the day goes on, the market's going to try to fight to get to the right-hand side of the Bollinger Band, up in here to see what happens. But there's another bearish event taking place. Notice the crossover that's happening. You got the 18 and the 100-day averages. it's starting to go and shift. Once it crosses over, you get another bearish leg that could build in the market. What else? Any rallies up there, pros worth their salt that use moving averages will be looking hard at as that being a resistance zone. When you come to the 10-year note, 2 days under the band, fighting to get to the right-hand side. But notice, this part of it's not trying to embed. It's just simply oversold. The dollar index is void of trend. It is not void of sideways trade. And this is what you call how you get whipsawed back and forth. Avoid the dollar. It's that simple. If the dollar's to be avoided, what do you think the eurocurrency should be? 40% of the dollar index is made up of this. It's logical that it's going to be waving like that. Too difficult. Why pay attention and why waste your effort? You have a bullish embedded reading in the pound. I think that each break is being bought. The objective, the 100-day average, well, you certainly got pretty darn close. You hit 135.53, that's 135.71. I think the pros are in this market, and I think they'll continue to be in these markets until you lose the embedded reading with the red line under 79, still looking for those targets in the market. Bitcoin, I have the right one on, March for you. I had December yesterday. I just missed it. I saw it, and my brain didn't work. But lower highs, lower lows, you can see how it's going. Now, some people are going to trade the Jan in this, too. There's nothing wrong with the Jan, so you can go either one. Maybe tomorrow I'll bring up the Jan just to get it there. We're so used to in futures going out a month or so for the volume, but might be better off here doing that one. In the Brent versus WTI, suddenly the market is shifted away from just breaking down, and all of a sudden you completely change the game. This is yesterday. Bias is still down, which means at that point in time, until we're through with OPEC, it looks like WTI and Brent coming together that way. I told you I don't like going into these meetings. I don't like going into FOMC meetings. I don't like going into an OPEC meeting where you're never quite certain what's going to happen. Well, OPEC came out and they're going to give you 400,000 barrels of oil a day more in February. That's what this meeting was about. They also made a statement that they think the market is much more imbalanced now, but after the first quarter, it might go back to a surplus market. Interesting as to what they're saying. Are they prepping you that they're going to cut, if they're going to a surplus market, they're going to cut oil again, production? Read between the lines. These are not your friends, these people. Their job is to drive prices higher for the benefit of them, not for the benefit of Americans. Our government's supposed to do our job and give us a good oil policy, and it hasn't. Simple. March Brent, higher lows, higher highs, embedded, strength. WTI, lower low, higher high. What rules today is the embedded part of it. The trends are still up. You're also starting to get, and you just got it, I want you to look at where the green and the red lines are. Christmas lines, yeah, but it's really the 100-day and the 18-day average of closes. Now watch. You just got a crossover tonight. So that's another bullish influence on the market. Okay, you got to watch these things. Heating oil, you had your bullish influence. You had your crossover. It often leads to higher prices. Boom. You don't have to believe me on these things, but they're patterns that people watch. And because they watch them, there's a herd mentality that takes place. And that herd mentality moves the market. I used to love the Maryland Jads with the bull running down the street. And why? And the Chicago Bulls, we have that. You know, when you go to a basketball game, by the way, 8 wins in a row, first time in 10 years, if I'm right. I'm a basketball fan. And when you look at that, I just go, whoa. You see that coming down? You want to be with that. You don't want to fight those bulls charging down the street. And that's basically the theory there. Nat gas, I've told you, I think this market's just going to rip traders apart as it's doing something important. Is this a bottom, or is this another area where it's building another top to drop from? I don't know. My instincts are it's a bottom, but I don't know, so I have to wait. So you put it all together, and what are you going to do about this? Well, you're going to take your cursor right now. You're going to move it up. You're going to get up here, see that icon, click on it, and I'll see you on Thursday at 12:30. I will open the chart room up, webinar, whatever you want to call it, at 12:15. Make sure everything works right. You'll hear music in the background. At 12:30 I start. There is no recording of it. You either attend or you miss it. I hope you're there. Take care.